Hi guys, you're welcome to 2024 and congratulations for making it to the year 2024. Thank you for being a part of this community all throughout the year 2023. You guys have made it happen. That's why we are where we are right now, and be rest assured that 2024 you are going to keep getting valuable trading insights from this channel. You are going to keep getting the weekly and even daily commentaries coming from my channel. All right, so every time you watch and you like what we are teaching here, you can just like the video, comment on the video. Let's get to know what you think and what you want us to teach you on this channel. And you can always share the video to as many communities you want to be a part of what we are sharing on this channel. All right, so you're welcome once again. This is our first commentary for the year 2024, and it's going to be very interesting because I'm going to show you something I have not taught in the year 2023, and I want this to be your teaser to the things that you're going to be getting in the year 2024. All right, so that you all should put up your notifications so that you get to get notified every time I post a video. You'll be the first to know that videos are up. All right, so today's lesson we're going to start with seasonal tendency. You've heard me mention this over and over in throughout last year. All right, in some of my videos you must have heard me mention about the seasonal tendency. All right, mostly for the dollar, but almost every asset has what we call a seasonal tendency. Seasonal tendency is literally the tendencies of an asset to behave in a particular way in given periods of time. All right, during each period or each season, there are certain reactions we expect to see from different assets or different currencies. All right, and this data was driven from a long period of data. All right, most times you'd see that this seasonal tendency, it's either a combination of accumulated data over a period of 15-year or 33-year, like we can see here. This is the seasonal tendency for the US dollar index. All right, for the dollar index. So that means if you are trading foreign currencies, it's important you know what's most likely going to happen on the dollar so that you can implement market correlation on the foreign currencies. And basic correlation has taught us that if the dollar is bullish, we know automatically that foreign currencies are going to go bearish, except in certain market conditions where there is a change in that behavior. Otherwise, we know that basic market correlation teaches us that when the dollar is bearish, foreign currencies are going to be bullish. When the dollar is bullish, foreign currencies are going to be bearish. All right, so literally this is because the dollar is the main driver of interest rates for foreign currencies. All right, so on this lesson of today, or on this commentary, I'm going to be showing you the seasonal tendency, but for the dollar, only for the dollar. I'm going to be showing you the seasonal tendency charts for the dollar and what we are most likely going to see going into the year 2024. All right, so the seasonal tendency for the dollar, or for most assets, is actually grouped into four. We actually have four contracts for seasonal tendencies. We have the March contract, like you can see here. All right, and the March contract is usually from January, February, and March. The month of January, February, and March, we classify that as the March contracts. Then we have the June contract, which is April, May, and June. All right, you can see 3 months. After 3 months, we have the September contract and we have the December contract. So it's four contracts all throughout the year, each year. All right, and the maroon line you can see here, it's actually indicating 15-year data or seasonal tendency for the dollar over a period of 15 years. This is what the dollar has been doing, all right, over time. And the blue line you can see here, the line chart here, it's indicative of a 33-year data. All right, so that tells you that when you see the dollar behaving in a particular way, we know that in the last 33 years the dollar has been behaving this way, and it will most likely behave the same way this year and the next year and the next year. All right, so currently we are looking at the March contract for the dollar, and you can see that on the March contract for the dollar, we can see the dollar is actually bullish. All right, the dollar is posing, will first pose some level of accumulation or consolidation, and then get to just push a little bit up going into the June contract. Remember, March contract, June contract, September and December contract. So the month of January, February and March. So as you can see that in the month of January, we started to see the dollar form a bullish price action. All right, the dollar was bullish, retraced a little bit on the 33-year data, and the same on the 15-year data. It retraced in the month of January and then started to trade within a range going into the month of February. So most likely the dollar is going to be in consolidation between towards the end of or middle of January into February. You can see it from the seasonal data here. So when we see the dollar reacting to support and resistance during February, all right, going into the month of March, we know that it's the seasonal data playing out, because we've seen it happen on seasonal tendency chart. Most likely the dollar would be consolidating between the periods of late January going into February and even towards the start of the month of March, all right, during the March contract for the dollar index seasonal tendency chart. Then at the start of the month of March, you can see the dollar now started to form a clear directional bias. So they started to see the dollar form higher high, higher low, higher high, higher low. You can see that a clear bullish impulsive price action happened at the start of the month of March going into the month of March, and then we see price created a shift of market structure right here. You can see on the seasonal data, and then the dollar started to go bearish from the month of March. So the month of March will most likely see the dollar form its high of the year. All right, in the month of March, we will most likely see the dollar form the high of the year in the month of March. All right, and look at what happened. The dollar started to drop towards the month of May. So the dollar has been bearish, forming lower low, lower high, lower low, lower high till the start of the month of May. All right, guys. So this is how you study what's happening on the seasonal tendency chart, using this to now using this as your macro perspective for the dollar index. All right, because this is seasonal data. We usually do this when you want to do position trading. You want to take trades on a higher time frame and hold it for 1-2 months, or even short-term trading. You need to analyze the seasonal tendency chart. And even when you want to do your day trading, when you know what's happening on a macro perspective, all right, it helps you now narrow down to the micro picture and frame your trade based on this information that you now know. All right, the seasonal data in confluence with commitment of traders report and many other informations that you would need to know as a professional forex trader. All right, what we are teaching you is how to become a professional forex trader, not a gambler. You are trading with information. All right, so we know that in the month of January we will anticipate a little bit of bullish price action and price going into consolidation towards the start of the month of March period. That's what we're anticipating to see on the dollar index chart. Then we go to our forex factory just to check the economic calendar, and what we want to do here is to be able to know if there is a high or medium impact news on the day that we are trading or in the week that we are trading, putting in mind news events we should not be trading like the NFP, the CPI and the FOMC. Reason is because it's not worth it to risk your equity to this kind of news events because of factors like what is it called now, that's few minutes or few seconds to the trade swap and margin that's going to be opened, and then you see spread being opened and it's going to take you out and sometimes even go in your direction, but you are not part of the trade because of that wide margin that usually is open during CPI, NFP or FOMC. So sometimes it's just better to stay off. All right, you shouldn't be putting your emotions to this kind of news that can go bad sometimes and take all of your money. It's better to gradually compound your equity than trying to do 100% a day using these news events. That's not what we are teaching you to do, because when you subject a large equity to this type of this type of events and it goes bad, you may not be able to comprehend the psychological impact it's going to have on your trading. All right, so on a normal day, we are paying attention to high and medium impact news events. The high impact news events are indicated by the red box you see on the Forex Factory calendar. Just go to forexfactory.com, click on calendar. You're going to see that on Monday. So you are paying attention to the day of the week, the time, the type of events, and the currency it's going to affect. All right, so you can see on Monday we do not have really any high impact news event except on the CHF pair, and if you are not trading that asset or its associate, it may not be important to you. So it means that we may have a low price delivery or slow price delivery on the dollar and dollar associated pair, and the Japanese yen also. They have a bank holiday on Monday, so it might be quiet. It will be quiet on that pair. All right, and on Tuesday we see medium impact. It's the orange box that you see here, and the yellow box signifies no impact at all. So the medium impact, and this is low impact, medium impact. So you can see Tuesday too is a bit quiet. All right, Wednesday it's high impact on AUD and GBP, but the AUD is it's a CPI coming by 1:30 a.m. during the Asian session, and the GBP it's around the New York session 3:15 p.m. GMT +1 right here on the calendar. You should check your local time and make sure that it's in confluence with your time zone so that you don't get to miss it or something. Then Thursday it's CPI as well. You can see CPI on the dollar 230. So this week is going to be messy, very messy. I will have little expectation this week. Remember, seasonal tendency has already told us that we would see a little bullish price action on the dollar and much of consolidation towards the start of the month of March. So in my head, I have low expectation and I expect price to trade within a clear range on the dollar index. All right, so you just go through all of this, count through, and then pay attention to the ones that interest the pair that you are trading. Then the next thing I will do is to just go to the dollar index chart and do my institutional order flow analysis on the monthly, the weekly, and the daily time frame, because the higher time frames are the main driver of liquidity. All right, remember the daily time frame will always respect the liquidity level on the weekly, and the liquidity levels on the weekly time frame will always be subject to what the monthly time frame is saying. So if the monthly is saying bearish and we see a sign of bullish price action on the weekly, it may be a manipulation or retracement. It will eventually trade into the weekly, into the monthly, draw on liquidity. Likewise, if we see a sell side liquidity pull on the weekly time frame and the daily time frame seems to look bullish, it will eventually trade into the weekly time frame sell side liquidity pool, because it is subject to the weekly time frame, and the weekly will always respect the monthly time frame. That's how institutional order flow works. And what we are looking for on the monthly time frame is to clearly define where price has traded from, where price is currently, and where price is trading into, because that will be the draw on liquidity. So previously we see that price traded into, we are reading the whole narrative now. All right, we are trying to understand the whole narrative. Previously we see that price reacted off a bearish mitigation block right here, like we have always been looking at this throughout the last year. So price traded into that level, then we saw that bearish impulsive price action, all right, creating that sell side imbalance, buy side inefficiency. Then price went into consolidation, traded into a discount below 50% of this range, the low to the high there. Let's do that. So the low to the high there, that's the range. So price traded below 50%, which is obviously discount, and specifically that fair value gap here that price traded into, and price also traded into that sell side imbalance, buy side inefficiency right here, clearing the highs of the consolidation here. Price traded into that level, and we now see the dollar creating a bearish order flow. Why? Because I see on the monthly time frame the dollar clearing the previous monthly lows. It has also formed a swing high on the monthly. What is a swing high? It's a 3 candle price action where we see the middle candle forming the highest high with two candles by the side, left and right. However, the two candles will always be lower than the middle candle. All right, so you can see here the high of the left candle is lower than the middle candle. The high of the right candle is lower than the middle candle. So what we have is a swing high. This is a powerful trend reversal pattern. All right, so we see that after price had traded into the sell side imbalance by side inefficiency. Specifically, let me outline that level here. You can see the high here and the low there. That's what we are looking at as our CB, sell side imbalance by side inefficiency. That wide gap, 50% of the range, is called consequent encroachment. Price traded into that CB and created that swing high and started to clear the lows of the previous monthly candle. This tells us that we are currently in a bearish order flow on the monthly time frame of the dollar index. But where are we going into? Where we are going to is the drawn liquidity. We are trading into this old low that you see here, which is the drawn liquidity. All right, and also we have a breaker block right here, or rather mitigation block, bullish mitigation block. So this is more like a model for me. This is more like a model to me. It's a mitigation block model. All right, why did I say that? Because we see price reacting off a bearish mitigation block here. You see that bearish mitigation, and price has a bullish mitigation block right here. So I see price trading into this level going into the year 2024. You'd come back and tell me that you once did an analysis and you told us that price action is going to trade into this bullish mitigation block. I can be wrong, but this is what I'm looking at going into the year 2024. All right, so right now I'm looking to see the dollar possibly trade into this institutional order flow entry drill on the monthly time frame. Why did I say that? Because I see that the dollar has left a fair value gap here, or inefficiency on traded 2. All right, an inefficiency that was on traded 2, fair value gap by the right, fair value gap by the left. This is an institutional order flow entry drill. I like to see the dollar trade into that level, then possibly start to consolidate. Alternatively, the dollar can be within a small range around this level, then finally finds its way into this institutional order flow entry drill during that beginning of March bullish run, before it starts to run into that sell side liquidity pool and head towards the bullish mitigation block right here. It's a probability. I can be wrong, but this is what I'm looking at, guys. All right, this is what I'm looking at. Okay, so let's go down to the weekly time frame for us to have a better understanding. So on the weekly time frame, what do you see? On the weekly time frame, I see that the dollar started to run, forming lower low, lower high, lower low, lower high. All right, I can see that there's a bearish order block here, but we are looking at that monthly time frame IOFEDs, and it makes sense because there is an equal high around this level right here on the weekly time frame. You see that equal high? I would like to see price action take out the equal high, trade into that IOFED, possibly trade into that bearish order block of the weekly time frame. Right here, the bearish order block on the weekly time frame before it starts to trade down. Remember, seasonal tendency tells us that we are going to see a little bit of bullish price action in January. Then towards the end of January, going into the end of February, we will most likely see price action within a range, meaning that it's consolidating. Then towards the start of March, price action will pose a little bit of bullish price action before the final drop going into the year. All right, all these things can happen within this level. So I'm looking at something like this. Price may just consolidate until that start of March, then price action will do that bullish move into that IOFED, or even clear the highs here, trade one more time above that high, clear that high, trade into the bearish order block of the monthly time frame before this move All right, this is what I'm looking at going into the year 2024. It's a broader perspective. Okay, but then the lower time frame would even give us more information, more clearer information, like the daily, because on the daily time frame we are paying attention to market structure. So on the daily time frame you can see price has been forming lower low, lower high, lower low, lower high. You can see that equal high here. I'm really interested in seeing the dollar consolidating and going to clear the equal high, trading to that bearish order block towards the start of March, or also clear the relative equal highs here, or the low resistance liquidity run, because this is what I'm seeing here on the daily. This looks like a low resistance liquidity run, so price would most likely trade above this level. If we see this bullish move happen in January, in the month of February that consolidation will happen, and you know that in the month of March we expect to see a bullish price action before the final drop. All right, so using that knowledge, you know that, okay, so if this guy goes bullish in January and trading to this level, all right, then what next are we expecting? Consolidation in the month of February. Price action may consolidate, leaving this uncleared. Then in the month of March, by the start of March, it will go for this level and trade into that monthly time frame bearish order block. You can see all of this level. It's a mitigation block as well right here. All right, so should price get to that level and give us a shift of market structure on the daily, that will be the start of that our dollar drop for the year 2024. So guys, this will be our first lesson for the dollar index. All right, so subsequently I'm going to keep getting other commentaries on the dollar versus GBP USD, but I don't want to make this video very long, so let's leave it like this. Okay guys, so this year you should prepare yourself for greatness this year. If you haven't watched my live video where I talked about how to succeed in 2024, you should go to my YouTube channel and go to the live session I had, the last live session I had. Listen to it. It's going to teach you how to prepare yourself for success in the year 2024. All right, those of you who don't have an active account you are trading, try as much as possible to get a proprietary account for yourself. You can literally register with the prop firm link on the description of the video, Funder Pro, all right, where you can literally get funded with as much as $200,000, and every time you make profit you can get your daily and weekly payouts on Funder Pro. They are one of the amazing proprietary firms I'm currently working with. Because of the daily and weekly payouts you get right from your first payout, you can get your first payout in 1 week and subsequent payouts almost every day, and it makes sense to me. Okay guys, so you can get your account with Funder Pro using the link on the description of the video. All right, those of you who want to join our private mentorship, also click the link on the description of the video and join the private mentorship community. What you get in the mentorship is you get direct access to myself, and you get to ask me questions where you're confused about some of the lessons I have taught. If you cannot afford it, it's totally fine. You can just watch the videos on YouTube. They are really very educative. You can tell that my videos are very educative, and you can make a lot of money with my videos on YouTube. But if you want to get a more defined approach and a closer relationship with me, because mentorship is key. So guys, we see you in the next video. I wish you good luck, good trading, stay safe.